All right, we're going to go ahead and get started. Good morning, everybody. Today is week 8 of Ultimate Techniques of Top Producers. And this week, we're going to talk about a very important subject, and that is financial budgeting and goal setting. So, one of the things that I have encountered with agents throughout my entire career is the lack of understanding on what it costs you to be a real estate professional, what you're actually paying out of pocket, and how to run your KPIs to understand exactly what you need to sell in a year to be profitable in relationship to your expenses. So we're going to talk a little bit about that. We're also going to talk a little bit about goal setting today, but the most important thing you need to know is you need to know what your financial back end looks like before you can even begin to set goals for your career. So let's talk about it. In real estate, financial success doesn't happen by accident. It's a result of careful planning, strategic budgeting, and setting clear, achievable goals. Whether you're a seasoned agent or just starting out, having a solid financial plan is essential for managing your income, expenses, and long-term career objectives. So think about it like this. All of you guys are individual businesses. I know that you maybe don't have a business name, you may not be running a team, but each one of you on this call, your first name and your last name is your business entity. Because you are working as a real estate professional, being paid on a 1099 and have out-of-pocket expenses, you need to run your real estate career like a well-oiled business would. So let's start by taking off your real estate cap here and putting on your CEO cap and start really thinking about your back end expenses and income. So first thing you need to do is you need to understand your cash flow. So let's forecast your income. And for those of you who want to do this worksheet, I highly suggest you do. It is in last week's attachment. I sent out sessions 7 through 10 in your email last week. So please print these pages. And again, I don't check homework. You don't have to do it if you don't want to, but why go through this training and not do it to really see what your profit and loss is in your business? So real estate agents earn commissions based on the properties they help buy or sell, meaning income isn't guaranteed on a regular basis. As a result, effective budgeting starts with understanding and tracking your income. So let's look at commission-based income. Now, if you have been a real estate agent for more than a year, I want you to take your gross commission income from your previous year and write it on this sheet. What is your gross commission income? That is not the amount of deposits that you received in your bank account. That is your net income. Your gross income is the total amount of commission collected from your clients over a period of 1 year. If you've not been a real estate agent for an entire year, then you can look at a 6-month period. You can look at a quarter. You can look at a month, whatever you want to do. But if you've been a real estate agent for more than a year, write down last year's number. The total amount of commission before any expenses, whether taken from the brokerage or your own marketing efforts, the total amount collected from your clients. Next, I need you to count up the amount of transactions you did that year, whether that's 5, whether it's 10, whether it's 30, whether it's 100. I want you to go ahead and put that number in there. And then next year, you're going to want to look at number of sellers versus number of buyers. Okay, this is what's going to help build out your metrics to understand your financial background and really what you're bringing in versus what you're spending. But you have to have these foundation numbers. So your GCI, your gross commission income, your total number of transactions, and how many are sellers and how many are buyers, because they all have different profit and loss points. So we need to know these. Seasonability. So real estate is often seasonal with peaks in the spring and summer and slower activity in the winter months. When planning your budget, account for these seasonal fluctuations by building up financial cushion during the busy months to cover leaner periods. This is a huge pitfall for most agents because, as you know, if you've been in real estate or have even followed real estate for a period of time, you know that things get a little stagnant in the fall and the winter, right? They do. They get a little stagnant. And then in the spring and the summer, it feels like everybody is buying and selling real estate. So you have to have that cushion. You need to know what your income flow looks like so that you can have that nest egg during the summer to prepare yourself for the winter. It is so easy to have all of this money coming in the summer and having this excess of money. And as an agent, you're like, well, I want to take a trip to Italy. I want to, install a big garage that maybe I don't need, but I want to put an in-ground pool in because I have all this extra money in the summer. And not that you shouldn't be able to do those things if you can, but also keep in mind that you may need some of that income for the fall and winter when you're not as busy. So you should have some type of nest egg. I often suggest making sure that you have enough to cover 6 months of expenses at all times in an account, which means 6 months worth to pay your rent or your mortgage, to pay for your utilities, to pay for your taxes, to pay for your food, to pay for your entertainment, to pay for all the kids' activities, whatever they may be, if you have children. If you don't have children that are still living at home, like myself, I have to account for my dogs because they're like my kids. I got one in the office with me today who's injured. So we have to account for their medical expenses, all of those things. You want to make sure that you have at least 6 months reserves. All right, pipeline management. Track your deal pipeline closely, identifying how many listings you currently have, what stage each deal is in, and the potential closing dates. This allows you to predict when commissions will be earned and helps you plan accordingly. All right, now I'm going to pick on a few people. Who can tell me how many listings they currently have on the MLS? Without looking. Rebecca, how many listings you got on the MLS currently?
I'm thinking 4 that are active and not under contract.
Great. LaDawn, how many houses do you have under contract at the current time? How many accepted offers?
2.
Great. So these are things that you need to know. Thank you for letting me pick on you, ladies. But these are things that you need to know. You need to know these things off the top of your head at any given time. If you're tracking your financial picture and your income flow closely, which all of you should be doing. All right. So let's talk about managing fixed and variable expenses. So this is kind of like the foundation of like, okay, what am I paying? What is the money that goes out regardless of whether I sell a home or not? So these are your fixed expenses. And we're going to start with the broker fees. Would it surprise you if I told you that some agents, even ones that work here, have no idea what their broker fees are? You all should know. You have to know. This is doing business. This is running a business. So we're going to talk about it. Calculate your monthly broker fee into your fixed costs for doing business. So the monthly broker fee, I want you to write it in. You only have an option of 2. You're either $175 or $125, unless you're free because you're a recruiting mastermind. And there are some people that are free for their, indefinitely. So, but know what that monthly broker fee is. If you don't know how to become free, so you don't have to pay that monthly broker fee, let's have a side conversation. But monthly broker fee, write it down. It's either $175 or $125. And now I want you to multiply that number by 12 because there are 12 months in a year. We're doing a year scale here. And again, if you're new to real estate and you haven't done any transactions, don't have anything closed, you can even put an imaginary number in there. I mean, you can do this, I know we have a couple newer people on the call. So you can do this imaginary too, and just do some assumptions if you really want to, and kind of treat this more like a pro forma. But put in your monthly broker fee and multiply that by 12. Next, I want you to take your MLS subscriptions. Some of you have 1 MLS, some of you have 3 MLSs. I believe that everybody on this call just has 1. So that being said, if you only participate in the West Penn multiple listing service, their monthly fee is $51 a month. And I want you to multiply that by 12 because that's an expense. That is a fixed expense. All right, next we have licensing and continuing education. This is also an expense that has to happen. Okay, so this isn't kind of variable. This is an expense that has to happen because if you don't do your licensing and continuing ed, then you cannot continue to work in your profession. So I want you to take the renewal fee and any CE costs that you have either spent in the last 2 years or that you are going to spend here in 2026 when we all have to renew. And then I want you to add those together and divide it by 2 because we're doing this based on a year. You only have to renew every 2 years. So that's why you're dividing by 2 because we're taking 24 months down to 12 months, if that makes sense. Any questions on how to put in these fixed expenses? No? All right, moving on. Some more fixed expenses. Per transaction fee. Remember how I told you to put down the number of transactions you did in the last 12 months? Here's why. You have to calculate your per transaction brokerage fee into your fixed costs for doing business. So compliance fee per deal is $200. Average transaction fee is $250. Now, if you have sold homes over $200,000, you know that that does go up. So make sure you account for that. Your average transaction cost per deal is $450. For those of you who have not closed a deal yet, and that's totally fine, we all start at the beginning. You can add this into your assumptions that your average transaction cost per deal is going to be $450. So next we do the math. You take your number of transactions and you multiply that by 450 to get your total per transaction fee cost over the course of your 12 months. So if you're doing your expenses here and we're doing them appropriately, you're going to take 450 and let's say, I don't know that this is true. Let's say Ebony closed 10 deals in the last 12 months. We're going to take that times 10. That's going to be $4,500 in that spot. You need all of this information to be able to run your final numbers. So make sure you're putting these down appropriately. Or if you're making assumptions that you're going to do 10 in the next 12 months forward, you could put that down, or whether it's 20, whether it's 100, you do you. This is just an exercise to help you figure out what goes into business for you to make your commission. All right, next, before we move on, any questions about those fixed costs at all? Everybody's quiet today. Nope. All right, moving on. Those are the easy ones. Here's where it gets a little bit tricky. So as you're working in your real estate career, it is important for you to keep accurate records of everything that you spend. And there's 1,000 different ways to do it. There's apps you can put on your phone. There's QuickBooks software. There's other accounting softwares. You can use an Excel spreadsheet. You do you, however you're going to do the accounting. I highly suggest using a QuickBooks product because you can have that online. You can also have that on an app on your phone. It's super easy to use. It helps you calculate and track your expenses and your income very appropriately. And your tax accountant will appreciate when you put it in QuickBooks because you can literally share it with him or her and they can make adjustments. They can see exactly what you're doing. Highly suggest it. But your variable expenses are much harder to calculate as a real estate professional. So we can do some guesswork on like, okay, when we're talking about budgeting, how much am I going to budget for my marketing costs? How much am I going to budget for my transportation and travel expenses? Those are a lot easier if we're looking forward instead of backwards. But if you go an entire year in your business and you've never written down what something cost you, and then you go back and try to like reconcile that out of your bank account, and you've got your business expenses mixed and mingled with your personal debit card, it's going to be a nightmare. And I guarantee you, you're probably going to overpay on your taxes because you're not properly expensing everything that you paid out. So just my own personal note is keep your costs, your business costs and your personal costs separate. You will thank me later. But it is important to track every penny that you spent in your business. And I'm going to go over a couple of those now, but trust me, there could be more. Some of these maybe you don't pay for, maybe you're paying for other things. I mean, you're an independent business owner. You can run your business the way you want. But I just put these in as things that I traditionally paid for to kind of get your wheels turning on some things that maybe you are spending also. So first is our marketing costs when we list a property. We want to start thinking about how much am I paying on average to hire a photographer? How much does that cost? I can tell you off the top of my head that when I hire a photographer to do listing photos of my property, just, the basic listing photos, I'm paying about $200 for my listing photos. Drone photography. If you're doing drone photography on your listings, how much does that cost? I can tell you with my photographer, it cost me about $150 for drone photography on my listings. Staging costs. I'm a big virtual stager. So what is that costing me per listing? And I usually put that in at about $75 per listing. Advertising. What am I spending on advertising? So out of pocket, aside from the brokerage and what they provide, what am I spending on advertising? So when I have a listing, I usually send out postcards, and that's $26.75 for my postcards. And I'm also doing some Facebook boosted advertising, and I usually spend about $75 on my advertising through Facebook and Instagram boosted posts. Okay, so that's my variable advertising cost that I kind of do across the board. Signage. How much does your signage cost you? So if you have a sign installed by the brokerage, how much is that costing you to put up? Are you including your own signage for that property? Did you get a special rider for that property that maybe says like, check out the pool or acreage or whatever? What did you spend on signage? And then what's my average gas expense per listing? How much did I spend in gas to go from my house or my office to the listing when they listed it and back? And how many times did I do this for open houses or whatever? It's important to know this stuff. Then you want to add all those items together for a total. And then remember how on page 1 of this worksheet, we asked you to identify the number of sellers that you had in the last 12 months. This is where this comes into play. Multiply that by the amount of sellers you had last year. That's going to give you your total seller marketing costs for your previous 12 months. Or again, if you're doing this ahead because you don't have that data yet, then you want to assume this ahead. Can anybody else give me an example of something that they spend on marketing costs for listings that may not be on this sheet that you may want to add on yours? Anybody? What are we spending money on that is not on this sheet? Nothing? No? Okay. Transportation and travel costs for buyers. So now we're going to break down the buyers. Average mileage per buyer. Do you know how many miles you drive per buyer? Well, that's easy enough to figure out if you have your 12-month data. I suggest using an app on your phone called Mile IQ. I believe it's like $9 or $10 a month. I use it. It's great. It automatically tracks your miles for you, where you're driving and when. And then you can classify them, whether they were a business expense or a personal expense. And then you can further classify them, whether you were spending those miles on a seller or a buyer, or whether they were just overall general like activities. So you can set that up however you want it. But I think it's important to know how many miles per buyer on average you are driving, because that's going to calculate your overall expenses per buyer. And that way, if you know what you did in the last 12 months, you can estimate what's going to happen in the future 12 months, right?
Yeah, they charge yearly. I think it's like 69, might be 89 for the year, right around there. I do for the whole year.
Yeah, I do too. I used to do it by the month. It's more expensive by the month.
Yeah.
Yeah, it's a really great app. It's a really great way to track things. The last thing you want to do is get audited on your mileage when it comes to your taxes. And I do have to disclose, I am not a tax professional. None of this is considered to be tax advice. please get with your accountant if you want to. I'm just giving you the basics on how to run your KPIs, because we are going to have a more full scale training coming up in August for those more seasoned advanced agents with their KPIs. And you newer agents can attend as well, but you have to have this information that we're talking about right now before you can start really pumping out those spreadsheets to figure out your business. So we will have a more advanced class coming up. It is on the training site so that you guys can RSVP for that. But you need to know how many miles you're driving per buyer. Now, we all know that sometimes we meet a buyer at a house and they decide to make an offer same day, like this is the one. And we all love that situation. But we also know that there are buyers out there that we drive around for an entire year before they buy a house, right? So we need to make sure that we have a good solid average overall for the average mileage per buyer is this. And then you want to do your mileage calculator. So currently, at least when this was made, unless they've changed it recently, again, I'm not a tax professional, you are able to write off 60 cents per mile. That is covering your gas, your maintenance, your wear and tear on your vehicle. That is set by the government. It's not set by me. It's not set by the brokerage. It's set by the government. That each time you drive from point A to point B 1 mile, it costs you 67 cents on average. All right. So you're going to put your average miles per buyer, and then you're going to calculate that times 67 cents per mile. And then you're going to multiply that by the number of buyers you served last year or will serve this year, what your goal is. Okay. That way you're figuring out how much you're spending on all of your buyers total and how much you're spending per buyer. That way you're really whittling down on it.
I think when you go to an accountant, I remember the one I went to, she had asked, like, what's your mileage? You want to go by mileage, or do you want to go by, I don't know if it's like wear and tear. Like, it's just, you pick one or the other.
You do. Yes. You pick one or the other. And with real estate professionals, I can tell you that usually, not always, but usually using the per mile adjustment is usually the best savings. But more so just for taxes, this is really going to help you budget what you're going to need. Because again, we're going back to, we're in the spring and summer months where money is just flying in. How much do we need to save for the fall and winter to pay for our mileage on our car? How much do we need to save for gas? If we don't have this information, you're just shooting fish in a barrel and saying, well, maybe I need to save $1,000 to get me through the fall and the winter. Well, that's not paying for your mortgage. That's not paying for, that's not paying for your utilities. That's not paying. I mean, you haven't even covered or scratched the surface on your personal expenses, let alone the business expenses that you need to carry yourself through to get the deals in the fall and the winter, right? So we need to know these numbers. So next is do the math. And again, this is very rudimentary. We're going to deep dive into this coming up in August, but I wanted to make sure that we had this basic training first for those who have not been on it before. So do the math. And this is going to give you the 10,000 foot view on what you're spending in a year. Okay. So go in and put in your gross commission income. Again, your GCI is the amount collected other than the broker fee. So the amount collected in pure commission from every one of your clients for the last 12 months. So when you filled out your commission sheet, whatever that number said, commission collected from clients, that's where you're going to put that on there. Next, we're going to go ahead and subtract out that broker yearly fee. Remember, that's your monthly fee. So you want to take that out. Again, it could be different. I put 2,100 in here. It could be different for you. It could be $0. It could be $125 a month. It could be $175 a month. Depends on your plan that you picked, and you know what your monthly fee is. Your MLS fee of $612. This is for the West Penn Multiple Listing Service. If you have more than one fee, you're going to want to calculate in each MLS together, whether it's West Penn, Allegheny Valley, GBOR, You want to calculate that in. E&O insurance. Everybody pays $600 a year. So, I mean, and that's pretty standard across the state of Pennsylvania, no matter where you hang your hats. It's $600 a year. Then you're going to want to add in your license and CE cost. And that's going to be different for everybody. Your license cost, of course, is going to be the same unless you have an associate broker's license. It's a little bit more expensive. But if you have an agent license, it's going to be the same. Your CE cost is really going to depend on how frugal you are, because you can get your CE costs covered at little to no money if you are attending trainings by NAR. If you're not, if you're doing those online, it's going to cost you $1 or $2. So you put that in. Next, add in that total per transaction fee, your total marketing costs that we talked about on the worksheet, your total buyer agents costs, and any other costs that you need to add. Maybe you have some yearly subscription costs that weren't on there. Maybe you have, I'm trying to think of something that I have that is just kind of just a generic, like QuickBooks. I have QuickBooks, like I could put in my QuickBooks. So it's not really a per seller or per buyer cost. It's just a general operating cost for my subscription to QuickBooks. So I would put that in. All right, then you add all those lines together. That's going to get you your full expense reported, your total cost that you spent on your clients to conduct business over the last 12 months. All right. Any questions on those items before we move on to your net operating income? No? All right. So what is your net operating income? Your net operating income is the amount of money you put in your pocket after expenses. Your net operating income is the amount of money you put in your pocket after expenses that you can now spend either on yourself or on your business forward. Okay, so that's going to be the amount of money after expenses. All right, so for simple calculations, let's say that you had $10,000 of reported income and you had $2,000 worth of expenses. It means that your net operating income is $8,000. Not saying that anybody did that. I'm just making it round low numbers so that everybody understands. Okay. So you're going to take your gross commission income, which was the income reported, the very top line. You're going to subtract out all of your total expenses. So that line above that says add all lines together with a dollar amount, you're going to take that out. That bottom line is going to be your net operating income, the amount of money that you made in a year after all of your expenses came out. That is so important to know, because that right there is the amount of money you make per year. When you work a regular W-2 job and you work from 9 to 5 for X amount of dollars per hour, and you ask somebody, and even a client, you ask them, okay, well, how much money do you make in a year? They'll be able to rattle that off. I make $62,000. I make $84,000. I make $34,000. Whatever that number is, they're able to rattle that off because they know exactly how much their employer is paying them, either hourly or salary, based on their job. But when you ask a real estate agent that, they're like, oh, I'm not sure. I mean, I did like 17 transactions last year. I'd really have to figure it out. That's a bad business owner. You need to be able to rattle off exactly what you made last year or what you are projected to make this year. You need to know your net operating income. This is how agents get in trouble. I hear horror stories all the time about how agents had to switch brokerages because they had to they had to sell their contract to get money because now they're in tax debt, or they don't have any money to survive the winter, or their car is going to get repossessed. And it puts them in this pickle that they have to make bad business choices to be able to save themselves and their family because they didn't know what their net operating income was. Or agents that have to get out of the business and take a full-time job when they're great agents and they're closing deals, but they didn't prepare for what's to come. And then all of a sudden they're like, I got to go back into the nursing field, or I got to go back to teaching, or I got to go take a job at Applebee's because, I don't have the money. And you look back at the last 12 months and it's like, how do you not have the money? What happened? And the answer is usually, well, I didn't account for this, or I didn't track that, or I didn't know I had to do, because they're not tracking it. They're not working as a business owner. And I don't want to see anybody else have to go through that either. All right, so let's talk about creating a monthly budget. So how do we avoid that? Your monthly budget breakdown as a real estate professional is you have to know your income. Based on your forecast, estimate your monthly income, but use conservative figures for the potential slow periods. When we're talking about this, I want you to use conservative numbers. I want everybody and don't get me wrong, I want everybody to have huge goals. I do. I want you all to have the ambition to reach better and newer heights every single days of your career. But when we're talking about monthly budgeting, I want you to be conservative. I want you to work on the worst case scenario, not the best case scenario. I want to make sure that you have more liquidity in your bank than less. I want you to get to a point where you have your nest egg, and after you get through that winter period and you've paid your mortgage and you've paid your taxes and you had a little nest egg in case your furnace went out and you had a little nest egg in case one of the kids got sick, you get to the next spring period and you're like, oh, I oversaved. Now I have this excess money that I oversaved for. So now we get to do something special. Because we oversaved, we're going to reward ourselves and we're going to take that big trip, or we're going to buy that RV, we're going to buy a new quad, we're going to do whatever we want for it that really brings us joy, because we saved for the winter. We're past the winter. We have an excess, and now is when we can enjoy. Okay. So I want you to be conservative with that. Make sure you have your fixed expenses, deduct your fixed expenses, deduct your variable expenses. Make sure that you are saving for your taxes. As self-employed professionals, you are responsible for paying your own taxes. Trust me, if you don't pay them, they will come and find you. They know where you live. Please pay your taxes. Set aside 25 to 30% of your monthly net income for taxes to avoid being caught off guard when tax season arises. This is the biggest pitfall of agents, is forgetting about those taxes. Please, please, please save for your taxes. Make savings a priority by setting aside a percentage of your monthly income. This will act as a cushion for slow months and unforeseen expenses. Aim to build an emergency fund that can cover 3 to 6 months worth of expenses. I save for at least 6. Always. My entire life, I have 6 months sitting in the bank account. I have it in a high yield money market. I let it sit there. I don't spend it. I let the interest compound. I never touch it. I am making money off my nest egg. Each and every month, I am making 6% off my nest egg. It's like free rent. It's like I make more off of my nest egg than I do on a rental property, just by letting it sit there. And I know that if my furnace goes out in September, we go to fire it up and it don't come on, I got enough for the furnace. And I didn't even pay for it. The bank paid me for it because I have compounded interest. So make sure, and we'll talk more about that later on when we get into our more advanced training, but huge believer in money markets for your nest egg cushion. All right, so let's talk about tax calculations. I want you to take your gross income and I want you to multiply that by 30%. And that is your total tax liability. Is it true that that's going to be exactly what your tax liability is? No, it's not. I can't tell you that. Only your tax professional can tell you that. I'm just telling you what you need to save. What I suggest that you should be setting aside in a separate account for your taxes. Set that money aside into a high yield savings account like a money market, and make sure that you have that money, but it has to be liquid. You have to be able to pull from it. So it can't be, a CD that you can't touch for a while. It has to have liquidity, which is why I often suggest money markets for this purpose, because you can withdraw from them at any time. There's no holding period. You can literally have access to that money in as little as 2 business days. But have it in a high yield savings account like a money market, but make sure you are pulling 30% of every check out to pay your tax liability. All right, tax planning and saving. Again, please make sure that you have yourself a good tax accountant. You want to make sure that you are paying your taxes. The IRS requires self-employment individuals to make estimated tax payments on a quarterly basis. For those of you who don't know, you're supposed to be paying quarterly taxes in. If you do not, you will get penalized. Do some agents just pay them at the end of the year? Absolutely, they do. But understand you're going to be paying more taxes if you pay them at the end of the year, because you are required to pay them quarterly. So you're paying a higher rate of taxes by waiting till the end of the year. These payments include income tax as well as self-employment taxes, which cover Social Security and Medicaid. Missing these deadlines can lead to penalties and interest, so be sure to mark your calendars. Please do yourself a favor and put in a calendar notification for April 15th, June 15th, September 15th, and January 15th of the following year, because these are when your quarterly taxes are due. If you don't know how to pay your quarterly taxes, it is important that you talk to a tax professional. They will give you coupons, and they will even help you estimate how much money you have to pay in quarterly. Track deductible expenses. So you have to make sure that you are tracking your marketing and advertising, your vehicle mileage, or a percentage of your car-related expenses, home office expenses, if applicable, education and training costs, client meals and entertainment. Those are subject to limitations, office supplies and technology fees. Okay, so these are all things that your tax accountant is going to want to ask what you spent on. Things like your cell phone, your printer, your copier paper, your pens, how much mileage you put on your car. Did you buy a new computer for work purposes? Did you take any CE classes? Did you pay your NAR association fees? Those are tax deductible. Did you buy your clients coffee? Did you buy cookies for an open house? Did you have a sign installed? How much did you pay the broker? These are all questions that need to be answered at the end of the year when you file your IRS taxes. So invest in an accounting software and work with a tax professional to ensure you're maximizing deductions and complying with tax regulations. Building the savings and strategy. We talked about having an emergency fund of 6 months. You also want to start thinking about retirement savings. So you could talk to a tax professional or a wealth advisor in this. I can't give you too much information on it. I am not licensed for that. None of us are. But there is a tile called One Future on our One Login. This will direct connect you with a wealth advisor where you can talk about SEP IRAs, solo 401ks, or traditional Roth IRAs. All right, so next, none of this is any good if you don't monitor and adjust your budget as needed. So one of the things I want you to do is track your performance. And I want you to compare your income, your actual income, to your forecasted income and make adjustments. When we're talking about goal planning, it's all well and good. But if you don't take the time to reflect back on it and see, okay, this is where I wanted to be. This is where I was last year. This is where I wanted to be this year. And this is where it actually came out to. There's no way that you can really make adjustments. If you see that your income is falling short, but your expenses haven't come down at the same rate, well, that may be an indication that you need to reduce your overall expenses because your income has gone down. Or maybe your income has gone up, but your expenses haven't gone up, which means you either got really good at being frugal or you need to increase your expenses so that you can further grow your income the following year. You need to be able to adjust your business income and expenses to ensure that your business is growing. And you need to budget and account for things that have happened as well as things that are going to be coming. All right. Questions on week 8, financial planning. Everybody's quiet today. Everybody's quiet. All right. Well, make sure that you come back for the additional training when we're talking about scaling your business in August. We have a new training schedule out for more advanced agents that want to kind of take this a step further and really want to run their business the way I run my business here at the brokerage, the way I ran my business as a team. So if you really want to know how kind of the back end systems work as you grow and scale, especially if you bring other people on, or if you're starting to do a lot of transactions, a lot of business, that's going to be super important. I think that no matter where you are in your business, having this financial training is important. Because it doesn't matter whether you're doing 3 transactions a year or 300, it is important to know exactly what your numbers are so that you can scale your business and achieve your goals in new and exciting ways. So week 9 is going to be the basics of team building. If you haven't seen the new training roster that has come out for the fall, we are going to be doing a team series. So we're going to have the One Team series of training. But of course, I do want you to take the basics of team building before we get into that. So we're just going to go over the 10,000 foot view basics of building a team. It's a common question that I get here at the brokerage. So we'll be going over that. And we're down to 2 weeks left on Ultimate Techniques of Top Producers. So if you guys have come to all 8 weeks to this point, you have made it so far, and I thank you so much. But of course, like always, I will stay on the line here until everybody leaves in case you have a question that you didn't want to ask to the group and want to do individually. And if you do not stay on, please have an amazing rest of your day. Thank you.